What's going on, everyone? Welcome back to Premium Option, the channel designed to help you learn and profit from the stock market and options trading. So today we have to talk about Apple and some really big news, a huge catalyst for their potential future, and it could definitely send them to basically brand new all-time highs, because as you can see on the chart right now, they're already at all-time highs. But as we know with Apple, they're just one of the best companies in the world, and they can continue to rise and rise and rise. And with this news coming out, or this news that they just announced, they could definitely be going even higher to new prices. But before we go into any of that, make sure you subscribe and like the video down below, because it really does help out the channel, and it'll also help you out because we produce these videos on a daily basis. And on top of that, we do have a free Discord for you, link in the description down below. That way you can stay up to market news, market updates, trades we're taking, and also stock talk and crypto talk if you guys are interested in that as well. Okay, so before we get into the actual video, I do have something that I do want to bring up. It's kind of like a stock market update, not just on Apple, but the entire stock market and what we're looking at. So this is definitely one of the things that is very concerning within the stock market and also the economy. And it's basically we all know about this new Delta variant, but it's interesting to look at how it's affecting us in the second wave, because a lot of people are saying the second wave is coming. Some people say it's not coming. So it's really interesting to look at the numbers and actually what's happening with big companies and the economy as a whole. So it says the CDC says that the Delta variant now makes up 83% of new corona cases, and it's 50% more contagious than the original Alpha strain, which again, that's just kind of he say, she say. But the more important stuff that we need to look into is the government side and the private side and what it's doing to the economy. So on the government side, it's basically kind of doing a second wave, and it's halting a lot of people. And even in California, half of California is back under the mandatory indoor mask mandates, as we can see that being rolled out in New York, Chicago, and other big cities. On the other side, the private side, Home Depot, McDonald's, and Target said that they would also require workers to wear masks in many locations, regardless of their vaccination status. And even Walmart and Disney are even requiring some of their workers to get this shot. So this is definitely affecting a lot of big corporations and big companies as well, which we can understand why. But let's compare it to what happened in March. Now, the March 2020 shutdown led to the US's biggest quarterly GDP drop ever. Now, I don't think that the Delta variant, and Robinhood doesn't think so either, we don't think that it'll drop or be as effective as the other shutdown, but it is still something that could very much affect the US economy and the market. And even here, it also says that the labor market is already tight. We are struggling with getting people jobs, and a lot of companies are struggling with getting workers. But the Delta variant could make it worse, because businesses could be strapped that their employees are taking advantage of getting sick, or that they're actually getting sick from the Delta variant, which people are already not willing to work, or the numbers are not very favorable for a lot of businesses. And so they're having to pay their workers a lot higher of a wage with lower revenue, which really doesn't help out the companies. And then also it's just a huge mess of stuff. But that's kind of like the stock market update. That's what's going on in the economy and how it could be affecting these stocks. So it's always good to keep that stuff in mind, what's going on in the background. So now let's actually talk about the news with Apple and what big news that they announced that I think is extremely important for us to understand. Now, Apple and Goldman Sachs have been together for a while, and they've done business with each other. If you know the Apple credit card, Goldman Sachs is that loan provider. But now they're talking about a buy now, pay later service to rival against other companies who have hopped on the bandwagon. It says that Apple Inc. is working on a new service that will let customers pay for any Apple Pay purchase in installments over time that is interest-free. The upcoming service, known internally as Apple Pay Later, will use Goldman Sachs Group Inc. as the lender for loans if they are needed for the installment offerings. Apple receives a percentage of any transaction made through Apple Pay. That's kind of how they make money through it. And it's a lot of money, because it's driving additional revenue to the company's more than $50 billion per year services business. Now, if more people can hop on Apple Pay, it's going to increase all revenue all around. And if buy now, pay later is kind of the new thing, and Apple reveals that to their hundreds of millions of Apple Pay users, that could be extremely huge for a lot of people. And here's exactly why it's a huge thing. I mean, if you haven't heard the news yet, I just made a video about it a couple days ago, but Square also bought the buy now, pay later giant Afterpay over in Australia for $29 billion. Now, this is huge because, well, one, Square is very innovative in the fintech sector, and they also realize that buy now, pay later is kind of the future of where finance is going to go. And there's a lot of data to provide that. I mean, even if we look at it, it says nearly half of Gen Z shoppers and 70% of millennials are more likely to make a purchase if they can BNPL it, which basically means just kind of loan it out and pay it in increments. And even Bank of America predicts that the market for the BNPL could grow 10 to 15 times by 2025. Which is just a few years away, which is really huge. So if this is all true, if a lot of companies are jumping on this bandwagon, if they're acquiring other companies like this, if Apple, PayPal, Venmo, Square, all of these companies are giving the option to BNPL and the market can grow super fast. Even companies like Klarna, who are valued at $46 billion, this could be huge for a lot of payment processing companies because it could bring in an influx of buyers who usually wouldn't buy something so expensive. So with all that being said, let's hop into the charts. Let's see how Apple is doing, where they're going, and where they might be heading to. So currently they are at all-time highs, which no surprise, Apple is just doing so well. But they are kind of stalling over at this all-time high. And if we drop down to the daily, we do have some interesting technicals here. So you can see that they are well above the yearly average right around here. The yellow line's the yearly average, and this is about the 3-month average, give or take. So they just passed up their all-time high right around here, and now they're dropping and treating it as support. So the real question is, can they treat this as the daily support and move up from here, or will they break down below and drop even lower? I think possibly if this happens, it's probably because, well, one, they have lower volume. As you can see, their average volume is around 75 million, and they've been kind of treating it at around 50-ish million, and the volume has been dropping. They are at all-time highs, which a lot of people are not as reluctant to buy stocks at all-time highs. Some probably will, but not always. And on top of that, they had a massive run up, and as you know, stocks don't always go up. They do need to retrace. So what could happen right now is if we take our Fibonacci retracement tool and bring it, you can see that I have this box marked up because this was another resistance spot in the market that broke past pretty strong. So if we do fall back down, we could retrace maybe 61.8%. And this could definitely be an area of interest if it does break below the support on the daily level. Now, for more of an intraday look, if we go in a little bit further, let me just erase this. We are consolidating pretty heavy. There's really no clear trend. I mean, we came off this uptrend, but we've been consolidating for basically like a week now. I take that back, maybe like 2 or 3 weeks at this point. So this is definitely something really interesting to look at. I mean, it could definitely break to the upside. The downside, honestly, I think one thing that could happen is we could potentially get a fake out to the upside, capture a lot of people who are buying the breakout for new all-time highs, and I think we could break this support and possibly drop back down to this level, maybe the 140 to 135 range. But again, it's just all speculation. We have no idea what's going to happen. But definitely for the long term, when Apple does announce that they're going to actually roll out their BNPL offering, I think it's going to be very good news for them, and we could see a very large spike in them in the far future. So if you guys enjoyed this video, if you found anything helpful from it, if you found anything informative, I'd really appreciate if you guys could support the channel by liking and subscribing down below. And also make sure to join our Discord, completely free for you guys, where you can get market updates, stock talk, and also trades that we're taking. All right, we'll see you guys in the next video. Peace.